The rumors end here. This is true dinar inside. Alright everyone, strap in. What if I told you that the very thing we've been looking for, the one sign we've been told would never happen, just flashed on screens that don't lie? I'm not talking about a forum post, a cryptic guru update, or a grainy screenshot from a random overseas website. I'm talking about the cold, hard, unforgiving data streams that power the global financial system. In the last 72 hours, something unprecedented and, frankly, shocking has begun to appear on the primary financial data terminals used by every major bank, hedge fund, and treasury department on the planet: Bloomberg terminals, Reuters Icon, and Refinitiv. And what appeared wasn't a glitch or a placeholder. For the first time in over 2 decades, live, actionable, interbank contract rates for the Iraqi Dinar, tagged as IQD, are being listed alongside every other major and minor global currency. Not a static official rate, but a fluctuating buy and sell price with a bid-ask spread, volume indicators, and a 52-week high/low tracker. This isn't a theory. This is a data event. Let me explain exactly what this means, because the implications are seismic and are being completely misunderstood by 99% of the community right now. This isn't the RV as prophesied. This is something far more important, and it's the final piece of the puzzle that tells us exactly where we stand. For years, we've been told the dinar was outside the system, a currency frozen in time. These data terminals are the system. Their very architecture cannot accept a play currency. For a security, and a currency is a security, to be listed, it must pass a brutal series of automated compliance checks. It must have a recognized ISO 4217 code, IQD has had this. It must have a liquid interbank market, this was the missing link, and it must have a clearing mechanism recognized by the CLS Bank, the global hub that settles trillion-dollar Forex trades. The appearance of live rates means one thing, and one thing only, that the backchannel, trial phase interbank trading between the Central Bank of Iraq and its primary correspondent banks, likely JP Morgan, Citibank, and Standard Chartered, has reached a volume and consistency threshold that has triggered automated reporting protocols. The system itself is now acknowledging the dinar as a tradable asset. This is the on-ramp to the global highway. But here's the brutal, necessary twist that every other channel is missing because they're not looking at the actual data. These initial contract rates are not showing a miraculous 1:1 or even 1 minute and 0.10 seconds revaluation. As of this morning, the buy contract was listed at 1,320 dinars to the dollar, and the sell contract at 1,325. That's a spread of just 5 dinars, which is incredibly tight and indicates serious institutional interest, but the base rate is still within shouting distance of the old official rate of 1,310. The explosive value isn't in the number yet. The explosion is in the existence of the number itself on that screen. It means the dam has cracked. The liquidity gates are now technically open. What you are seeing is Phase 1, institutional price discovery. The big banks are now, in real time, figuring out what they're actually willing to pay and accept for massive blocks of dinar amongst themselves, with zero retail involvement. This process always comes before any public-facing rate change. It's the quiet conversation in the boardroom before the announcement on the stage. And watching this live data is our only true window into that room. The narrative has now permanently shifted from when will it happen to watch the spread. When that bid-ask spread between the buy and sell contracts begins to narrow to just 1 or 2 dinars, and the base rate starts a sustained, incremental climb, first to 1,300, then 1,250, that will be the real-time signal that the final alignment is happening. The hook is set. The system is now aware. The next move is not ours to make, it's ours to watch, with more clarity and hard evidence than we have ever had before. The screen doesn't have an agenda. It just reports the truth of money moving. And right now, for the first time, it's reporting that money is starting to move for the IQD. So now we have a data point. A real one. Live contract rates for the Iraqi dinar are appearing on professional terminals. This is undeniable. But before you jump to the conclusion that the finish line is in sight, you have to understand the war that is happening right now, invisible to the public, on these very same data feeds. This isn't just about a number appearing, it's about a battle for narrative control between two powerful forces, the automated, algocentric global trading system and the deliberate, stability-focused monetary policy of a sovereign nation. What you are witnessing is not a peaceful introduction. It's a financial incursion. The global Forex market, a $7.5 trillion a day beast driven by algorithms, geopolitics, and pure speculation, has just detected a new signal. It has sniffed out the liquidity trails from Iraq's correspondent banking relationships and, like a predator locking onto a scent, has begun to price it. The system doesn't care about redenomination plans, IMF agreements, or political stability. It cares about volatility, spread, and arbitrage opportunity. And right now, it sees a currency with a massive, tempting peg. The appearance of these rates is the global market's first probe, its way of testing the defenses of the Central Bank of Iraq's, CBI, official rate. This is where the fascinating twist comes in, and it's the key to understanding everything that happens next. While the retail world is fixated on a revaluation number, the real war is being fought over liquidity versus control. For decades, the CBI has maintained strict control through a de facto peg, managing the rate within a tight band for domestic stability. Its foreign reserves, reported to be around $95 billion, are its ammunition for this fight. The moment live, interbank contract rates begin to flow, it invites the wolves of high-frequency trading and speculative capital. They will test every weakness, exploit every minute gap between the contract price and the official price, trying to force movement and create profit from volatility. The CBI's goal is not to spark a speculative frenzy but to manage a transition. They need to introduce enough liquidity to satisfy international banking partners and the IMF, but not so much that they lose control and let the speculators dictate a volatile, politically dangerous price spiral. Therefore, the single most important chart pattern you need to watch is not the exchange rate itself at first. It is the bid-ask spread and the trading volume attached to those new IQD contract listings. Remember, the initial rate was around 1,320/1,325, a tight 5 dinar spread indicating institutional, but cautious, interest. Here's what to look for. If the CBI is successfully managing this incursion, you will see that spread remain tight, but the volume will be low and sporadic. It will pop up for a few hours, then disappear for days. This is the sign of controlled, trial phase settlements between major banks, liquidity on a leash. However, if the global market starts to win, you will see two things. First, the spread will widen dramatically. You might see a buy contract at 1,300 and a sell contract at 1,350. A 50 dinar gap signals panic, disagreement, and illiquidity. Traders don't know what the price should be, so they protect themselves with a huge buffer. Second, and more critically, you will see sustained volume. The ticker will be constantly active. This means speculative money has entered the fray in size, and the market is trying to discover a price through pure trading pressure, independent of the CBI's wishes. This is the danger zone. This is when the central bank would have to spend its reserves in a massive way to defend its official rate, or risk losing control entirely. So, the narrative has flipped. The RV is not an event, it's a siege. And the data on your screen is the live battlefield map. Every flicker in that spread, every spike in volume, is a skirmish. The CBI's $95 billion in reserves is the castle wall. The question is not if the rate will change, but whether the Central Bank of Iraq can execute a controlled, strategic retreat from its old peg to a new equilibrium without being overrun by the global algorithmic cavalry. The appearance of the rate was the opening shot. The battle for its soul starts now. Now we reach the decisive moment, the culmination of this entire data-driven siege. We've seen the contract rates appear, signaling the system's recognition. We've analyzed the battle between the global markets and the Central Bank of Iraq, CBI, fought over liquidity and control. But this final chapter isn't about watching the battle, it's about understanding the outcome and what it compels you, the viewer, to do right now. Because the most critical phase is not the fight itself, but the moment one side secures victory. That moment will be broadcast not through rumors, but through a specific, verifiable data sequence that you can and must learn to interpret in real time. Forget the static rate tables you see on free currency websites, which still show the old peg of around 1,310 dinars to the dollar. The future is on the professional terminals. The ultimate confirmation will come in 3 distinct, consecutive waves across multiple independent financial data platforms. First, you will see the bid-ask spread on those live IQD contracts collapse to near zero, perhaps just a single dinar or less. This indicates the market-making banks have reached a consensus on the currency's true price, the war over valuation is over, and a new, stable equilibrium has been found. Second, simultaneously, you will see a sustained, high-volume ticker on the IQD for 72 consecutive hours. No gaps, no disappearances. This is the sign of final, full-scale liquidity injection. The siege engines have broken through the gate, and the flow is now constant and institutional. But the third and final wave is the most crucial, and it's where most people will get the story completely wrong. This is the ultimate twist, the piece of information that separates the informed from the hopeful. When those first two signals flash, tight spread, high volume, the displayed contract rate will almost certainly not show a fantastical number like 1:1 or 1:3. It will likely show a modest, incremental adjustment from the battlefield position of 1,320 to something like 1,300 or 1,290. This will cause a panic in some circles, a declaration that the RV has failed. They will have missed the entire point. This modest move is the controlled, strategic victory for the CBI. It represents a successful, managed transition to a new, slightly stronger peg without triggering hyperinflation or a speculative meltdown. It is the proof that the central bank used its $95 billion in reserves not to lose the war, but to win it on its own terms, by guiding the market to a stable landing. This is the realistic, data-based outcome that serious financial observers have always pointed toward, a gradual strengthening tied to concrete reforms, not a magical windfall. Your job in this final phase is to be the calm, informed analyst in the storm of confusion. When others are reacting to the wrong number, you will be watching the right metrics, spread, volume, and sustainability. Your evidence will not be a screenshot from a guru, but a live feed from the terminals where the world's actual money moves. This is the transition from speculative dream to tangible, albeit complex, financial reality. The opportunity shifts from mythical wealth to a real, trackable Forex event that requires strategy, patience, and immense discipline. This brings us to the most important point of all, your action. You now have the map. You understand the signals. But knowledge without application is just entertainment. If you stayed with me this far, you've proven you want the truth, not just the hype. So here is your definitive call to action. Do not go out and try to buy dinar from unregulated vendors. That path is fraught with scams and illiquidity, as warnings from multiple state agencies have indicated. Instead, your mission is to become a forensic observer. Bookmark the financial data platforms we've discussed. Set alerts for IQD if you can. Cross-reference every claim you hear against the primary sources, the Central Bank of Iraq's official statements, IMF reports, and real-time trading data. Your power is no longer in blind faith, it is in verification. And your engagement right now is critical. This channel, True Dinar Inside, is built for analysts like you. We cut through the noise to track the data. If this deep dive has changed your perspective, if it has armed you with a realistic framework, then you need to be here for what comes next. Smash the like button right now, it's the simplest signal to me that you value this level of analysis. Subscribe and hit the notification bell, because when the next data signal hits, like a sudden narrowing of that spread, I will break it down immediately, in this same no-nonsense style. Most importantly, comment below with data-driven. Let's build a community of viewers who operate on evidence, not echo chambers. Share this video with one person who needs to hear this reality check. Your watch time on this full analysis tells me you're ready for the real journey. The rumors end here. The analysis continues now. This is True Dinar Inside. I'll see you in the next update.